Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. A little bit of a different video today as I have to jump on an airplane in a little bit here. So I just thought I would do a classic screen share and go through what's been happening in the markets today. All right, let's start off with just a rundown of futures. We have canola up $3.90 today to close out at $7.1980. Soybeans are up 3.25 at 10.51. Corn is up or down 4 to 4.47 today. Minneapolis wheat is up 14 cents or 14.75 cents at 6.18 today. Wheat is up 3.75 cents. Chicago wheat at 5.34. Hard red winter wheat is up 6.5 at 5.31 3/4. We do have soybean oil down almost 1% today at 48.39 cents per pound. Meal's up a little bit. Rapeseed is down pretty heavily today in Europe, down 9 at 4.72. Palm oil is also down about half a percentage point. What else can we talk about here? We got live cattle up 160 at 215.52. And we have, that's the June. I'm pretty sure the most of the open interest. Oh, no. Well, open interest has mostly shifted to August here. So we'll report here on August live cattle up a buck 90 or 190 at 210 and change. Feeder cattle up 430 at 299.92. We got the Canadian dollar at 72.46 today. It's been relatively stable in the last little bit. And the stock markets saw some gains today. Well, some of the stock markets. S&P 500 is up. NASDAQ, however, is a little bit lower. All right, let's get into some of these charts here. I'm going to show July canola first. I do have, so this is a bit of an interesting chart because you can kind of see the momentum has been leveling off. A bit of volatility here in the last couple of weeks. It's been testing this 20-day moving average, hasn't broken below that for a long period of time. So and we still kind of have this pattern where we don't see down days twice in a row. So overall, you can't call this market bearish by any stretch of the imagination. Can you call it toppy? That maybe you could call it toppy. I have layered over a Fibonacci retracement level here. I usually don't do that until the market has broken below some support, but it's tough to really understand where the support is here because the trend lines are kind of wonky right now. As a result, I don't have them on. The 20-day moving average has been broken, but rallies back over. So we don't see a sustained move below the 20-day moving average. So, overall, it's tough to say, hey, when do we layer on a Fibonacci retracement? But just using the bottom of the market here in the beginning of March and the top here as we got into the middle of May, a 61.8% retracement would bring us, right around to 632. I'm not necessarily saying that I'm calling for that. I'm just saying that we could see that happen as a retracement without even necessarily breaking the recent trend. So, the risks on canola are deepening somewhat, but it's still too early to call this dead or over at this point in time. Although seasonally, we often do see the top of the market in the month of May. Let's move into November canola here. As you can see, we are still trading well above trend line here. We're trading well above the 20-day moving average. It did make a new high just 3 days ago. So November canola is behaving pretty well. I would say that, the crush margins, let's see if board crush in margin index close, we got board crush margins here on the NOV at 122 per ton. We've the NOV D's at 127. So, we still have some okay crush margins as we move into the fall period of time. So that may be helping support, canola in the November position to some degree. Looking here at soybeans, haven't been talking a lot about soybeans recently. It's been relatively sideways and neutral over the last little bit. Today's trade is a little bit concerning. It did break lower and below this consolidation of moving averages and did trade to, a new recent low, or not necessarily a new recent low, but a new low in the last few weeks here. It did close above some of those moving averages, still a red candle here, so a little bit of concern. But I would still call this very much sideways or neutral market at this point. Corn is kind of in the same boat here. We have, maybe take this support line away. I don't know. We have this low punched in here at 435, 436 that was put in back on the 13th of May. It's kind of rallied since then and is now coming back off. There's a couple of touch points in that area there. So I would be looking at this 435 area as a bit of a support level in corn. So again, U.S. row crops overall are looking a little bit sideways. We do have some positive action in the Minneapolis wheat. As we know from yesterday's video, the crop condition ratings in spring wheat were 45% good to excellent, significantly below the average trade estimate. That did rally the market yesterday, but it almost looks like today it got a little bit more of a boost as a result of that. This market, it is the weather market right now for spring wheat and for northern hemisphere crops that aren't necessarily row crops. So this is kind of a normal seasonal thing, I would say. How far this rally goes is yet to be determined. Again, as we pointed out, there's only 10 million acres of spring wheat planted in the U.S. I think, and we have the under on Canadian acres at this point from what StatsCan reported last time. So there could be a little bit of a shortage or a little bit of a smaller balance sheet in spring wheat than what was anticipated earlier, and that could be helping out the spring wheat market. We could also be seeing that as a spread trade, right? So if we are looking at Minneapolis versus Kansas. So, talked yesterday about how that moved up to about 77. Today, it spiked up again to 83 cents difference in between the two. As you can see, we have kind of a cluster of trade here on the spread between 95 and 110. So realistically, we could get there pretty easily. If we back this off even further, as you can see, there is times where that has been $1.50 and even spiked up above $2 a bushel in some cases. That was back in 2021 when we saw those levels. But for now, this is the spread is widening. That means that there's some positivity coming into the spring wheat market as opposed to the other wheat markets. We know that the other wheat markets are under some threat from fundamental standpoint. We've seen increasing crop prospects in the Black Sea. We have big carryouts in the U.S. Over 900 million bushels was the last USDA carryout estimate. So that's putting pressure on these winter wheats. And you can see we are not seeing the same level of engagement here that we are in the spring wheat. So spring wheat's a bit of a shining star here at this time. The interesting thing, and I'm going to kind of go back to canola here, is that we're not getting the same level of juice out of the soybean oil market. As you can see here, it's continued to fade this week as we move through the week. It tested the 50-day moving average today. It did hold that, luckily, but if we continue to see a breakdown below that level, it could mean further weakness on this report. Actually, what I could do here is I could put a Fibonacci retracement on this soybean oil market, and that would look something like this. That could bring the 61.8 here down at 45.77 a pound, which would be that would be probably something that would hurt canola to some degree. And extend right is what I like to do here. That would put some pressure on canola markets. So that's something we do want to watch because, right now canola is kind of diverging from soybean oil. Whether that happens in the long term is yet to be seen. So we want to keep an eye on that. Okay, what else do we have here? We have August rapeseed making some big negative moves here. Again, that could put more pressure into the canola market for us. We've had three, pretty aggressive days of lower trade here, down below the 200-day moving average now, which is a bit of a signal, trend changing signal. So as we move into tomorrow, we'll want to watch that to see if it continues that move lower, or if it does reject a move below the 200-day moving average. I would look at that as a bit of a risk factor in this marketplace at this time. Of course, we are seeing some losses in the crude oil market as well, but that's still relatively stable at this juncture. So that is about all that we have for you today. Just to give you an idea about what's happening tomorrow. I'm away from the desk tomorrow, so we will be replaying the interview that I did with Real Ag Radio this week, and we talk about canola fundamentals in that spot. So tomorrow will be a little bit more of a fundamental focus. Today we looked at charts, so hopefully you enjoy both of those kinds of videos, and we look forward to seeing you again tomorrow.